Traders, welcome back to another price action trading lesson. We're looking at S&P 500 M&A futures. The time frame we're going to be using is 2000 tick chart, and today is FOMC announcement day, which is quite important because these days tend to be very slow and choppy prior to announcement, and after the announcement is out, there can be spike in volatility. So this is something you need to keep in back of your mind, that the price action can be slower than usual. It can be choppier. The market may not be as structured as you would normally want. You still want to follow the same price action rules, but just something to keep in back of your mind that the market may be quite slow and choppy. But as of right now, as a price action trade, I can see that I have a series of lower highs and low lows. So I have a downtrend working lower. This is the pattern. So I'm not thinking about buying. I'm mainly thinking about selling, but I need to sell at the right place, not at the bottom of the push phase. Market is correcting, and we actually have new low here. I'm going to reset the count because we are in the downtrend. And you have first entry short, pullback, second entry short. We're going a little bit sideways. It take higher, reverse down, great signal bar. Problem is, you can see market is starting to go quite sideways bottom here. You don't have that much room to scalp down. It is a decent setup. It ended up working. I wanted to enter the trade with a little bit of a deeper limit order because I don't like how low you're closing, but it's an okay setup to consider. Second entry short at the EMA, solid signal bar. Work for a quick scalp. You can actually mark it red. I'm going to mark it red, second entry short. It's better to use some limit order, because really you can see how we're starting to bottom, so you want to have room. Okay, this is not lower high because the new low has been made. The signal bar is not ideal, so this is just first entry short. And market is correcting, so I'm going to redraw a brand new uptrend working higher. We're breaking this downtrend, so we expect, according to price action trendline rule, to test the new extreme. Just because there's a break doesn't mean that the market is going to reverse. No, I expect trend to continue. I just need to get a good opportunity for me to sell, preferably something below EMA. There was nothing below EMA. You only have here, which, you know, this is what it is. New first entry short, second entry short. So this is only third entry short, and even there is not good resistance. Can I draw something like this? I don't have that many bounces here, so the resistance is quite ambiguous. You can treat it sort of as a mini fell breakout. You can see break higher, but it's truly better to get the lower high. And if you took it, not a bad setup. If you have some clear resistance and a lot of confirmations, for example, this to be triple test, you can definitely take this setup. But because the resistance is not fully confirmed, you know, it's a bit more aggressive, but not a bad setup by any means. Can I get lower high confirmation setup? No. Almost new low made. You get lower high here, but you cannot take lower high after the significant push down already happened. You can see this is significant push down to the point that it almost looks like a new low has been tested. So I cannot really go short now. Plus the signal bar has a bullish body, not that significant, but the main problem is how long this push down was. You want to take a lower high somewhere around here when the push down is about to happen. So right now I'm being patient. I'm going to redraw the short-term uptrend working higher. So right now this is mainly area of development because we expect new low, but at the same time market may consider this as new low tested. So I need to be patient. I'm not looking to go long because we traded down. This is the bigger pattern, and I always want to follow the main trend. So I'm just going to be patient now. I can only sell if I get some decisive push below EMA, and I really don't want to go long because uptrend played out with the break and pushed to a new high. So let's see what's going to happen. Right now we're just going sideways. Nothing is happening here. No price action offering good entries. I'm just going to be patient. You can see still don't want to take anything. Everything played out. And finally, market is trending lower. So this is what I like to see. Price action is easier to navigate. So I'm going to follow the short-term trend line. And now it's looking like this downtrend is about to test the new low. And this short-term channel is in play as well. So right now, what I'm thinking about is potential second entry short at the exponential moving average. But we already have a break and push to a new extreme. So downtrend already played out with the break, push to a new low. So what I'm going to do, I'm going to pause looking to go short because the trend line played out, downtrend, broad break, push to a new extreme. Once again, no good lower high, no full second entry long, no second entry short at EMA, nothing. So after the trend line rule played out, as a price action trader, I need to right now predict new market cycle. So let's see what's going to happen. Trading range or reversal. In order for me to predict reversal, I would need felt second entry short above EMA. That is the reversal pattern. But market continues working low, so this is not something I want to see because you have a new extreme. Why the market is turning lower? Now we're going above EMA, so I can reset the count new low first entry short failure. I have a felt second entry short here, but problem is it's below EMA. And reversal pattern needs to form above exponential moving average if you're thinking about buying, okay? Reversal pattern is characterized by two failed attempts in previous trend direction. Previous trend was bearish, so second entry short above EMA is going to be trapped because the downtrend played out. But now you drifted way below EMA, so this is telling you, okay, I cannot go long just yet because it's also congested, but mainly we're below EMA. Nothing is happening, congestion, okay, breaking new high, push lower, push up. This is really super choppy. This is typical FOMC price action where no good structure is established. We don't have an edge as price action traders because you can see this is no structure, just going sideways. So I really have to be patient. When I'm watching this, I'm not even thinking about setups because as a price action trader, I want to take a high probability setup at the key entry point under good context. And right now, nothing is confirmed. We're just going sideways, whipsawing up and down. Super choppy price action, breaking new high. The market keeps going higher. We keep going lower. And this was tempting lower high because at this point, you can start playing this as of some form of a trend range. But the lower high here is an inside bar. And inside bar is a weak signal bar. And you can see new high for a central low failure. So because I have inside bar, I don't really want to take it, but it's time to resemble some consolidation. I'm trying to play with the break new high. You're going back higher. Why are we not making it to the bottom? This is telling you, okay, the buyers are still strong in the market. I'm just going to follow the short-term trend line, but I don't really have no trade to go long, nor short, so I just have to be patient. You know, there is no good direction. I'm just going to follow the short-term uptrend. Breaking new high again. Market is trending lower, so I'm going to redraw a brand new downtrend, something like this. Okay, back into trend range potentially. You have a new high for a central long pullback, second entry long failure, but of course we cannot sell so far from the EMA at the very bottom of the move. This is no trap. Okay, for second entry long is supposed to form when the move is about to happen and you want to ride the momentum down, not when the push down already happened. New low, so you need to reset the count. I have to redraw short-term channel. You have a second entry short, but actually it's new low here for a entry short. You can count it visual as a second entry short, but the signal bar is doji. Short-term option is in play, plus the count reset, not the best. And then we have the FOMC announcement, spike in volatility. I actually don't like the empty room. I like drawing it a little bit steeper, like this, because it fits a little bit better. However, we have a break and already pushed to new extreme, and this is important. If I'm going to zoom out, we talked about this often, but this is the low of the day key level, and this is the highly important key level. Okay, you don't have to be too preoccupied paying attention to all these insignificant key levels on the chart. You mainly want to focus on local trend ranges and these important key levels, because these important key levels may tell you a lot about the market, and they are important. So because right now this downtrend played out to break new low, it also resembles like two-legged pullback down, and you are at the bottom near the low of the day key level. You can see this is not a trending market. This is looking like prolonged consolidation. In fact, I can draw something even a little bit wider, let's say something like this. In hindsight, you can see bounce here, bounce here, bounce here, break new extreme. So everything played out. I cannot draw super broad like this because I have no confirmations. This is too broad, okay? No confirmations at the bottom, no confirmations here. Okay, only one bounce here and one bounce here. So this is too broad. The broader this is, the more you have to select most recent channels when you're watching this live. So this one is still doable. A lot of confirmations, break, push to new extreme. So everything played out. All the downtrends played out. Two legs down, we're bouncing the low day. So according to price action, it makes sense right now to predict that the buyers are going to be stronger because everything for the sellers played out. Just reading the pure price action. Okay. We're below EMA, can't go short. You can see tempting short here for second entry long, but we're not pattern traders. The context is important, and everything based in context is telling you that you have to pause looking to go short. You actually have a decent setup. New low, first entry short, pullback, second entry short failure. Back above the EMA, back above the key level, bottoming pattern, breaking new low. We're going sideways, so the sellers are being depleted. They're about to be trapped, push above EMA, new low here for essential second entry failure. So this is actually one of those few decent setups today on an FOMC day, felt second entry short, so we can consider taking this felt second entry short. And now we have a new high, first entry long, pullback, second entry long. This is stronger setup. This is continuation of the failed second entry short because those traders here, they're still holding their positions. It offered you additional confirmation. EMA keeps holding, trendline keeps holding, another second entry long. This is a great setup, second entry long at the EMA. I'm gonna mark it, I forgot to mark it. Continuation of the failed second entry short, so this is also strong confirmation. Uptrend keeps going higher, so I'm gonna widen the channel because we keep pushing higher, we keep pushing higher, we keep pushing higher. It still looks like a one push working higher here. So I'm gonna widen the channel, something like this. Okay. New high for central long only. At the time when I was watching this, I actually played small break push to new high. I had a small break push to new high. You felt second entry long, but the signal bar is neutral, so I can't really play it. I redrew down channel like this because the retracement is quite long. We are breaking new high. So I was thinking about second entry short, but since you broke above EMA so strongly, right now I have to adapt. This break is tiny, so if I'm going to widen this, and if I'm going to go on higher time frame 10,000 tick chart, it looks more like a one leg break, second leg. So now it makes sense why there was no second entry at the EMA. Now we have breaking new high and uptrend played out. Okay, so this is how I'm working with channels like this. I'm following the price action. I don't need to predict it. If I just remain patient and I follow it, I can still navigate the market correctly. So because uptrend played out with the break new high, and you can see how broad this looks, one leg broad break, second leg, I have to pause looking to go long. I don't want to sell though above EMA still, because EMA is providing support. I can sell if I get a push below EMA in a lower high confirmation setup, so I can't go long, can't go short. Okay, everything played out, all trends played out, so now we have just sideways consolidation. Okay, this is really confusing. There is no price action edge because everything played out very neutral. Downtrend working lower, something like this, breaking extreme, push above EMA, but unfortunately now it's getting way too late. The market is about to close now. So this is the overall structure for today. Not that many great setups, but this is to be expected when we have FOMC announcement day. So you have to be really open-minded trading FOMC because there are really not that many great setups. And unfortunately, price action wasn't really that distorted. There wasn't spike in volatility, so we can trade it right after news, but there weren't that many setups. So typical boring FOMC day. Your main goal here is to preserve your capital, follow the rules, practice patience, and if you do all these things, you actually manage this day correctly, like a professional. So I'm going to wrap it up. I hope you had a good trading day, and I'm going to talk to you next time. Feel like you're trading.